Hey, what's up? My name is Suleiman and today I'm back with another video, and today I'm going to be talking about how you can diversify your portfolio by adding REITs. Let's get right into it. First, let's talk about what REITs are. REITs are basically buying shares of a real estate investment company that buys other real estate to bring in income. REITs are very similar to dividend stocks. Just like you buy shares of, say, Coca-Cola and every quarter you receive a dividend, REITs are very similar. You buy shares of a real estate investment company and every quarter or whenever they pay out their income, you get the money. When you buy REITs, the money that you put in, the company has to use that money to buy real estate, and there's a lot of types of real estate that these companies can buy. There's residential properties they can buy apartment commercial buildings. There's also retail like malls, and another is healthcare or like hospital type buildings that they invest their money in. Just like shares of stock, you can buy shares of REITs from any brokerage like TD or Ameritrade. Alright, let's talk about the types of REITs. One of the common type of REIT is equity REIT. So basically, you buy a REIT, you put your money in to the company, then the company buys real estate, like I said before, and this real estate is usually income producing. Like they buy apartment building, and that money that comes in from the rents after expenses is the net income, and then they pay that money out to the shareholders. Another type of REIT is a mortgage REIT. Mortgage REIT, you're basically kind of becoming like a lender. So you buy the shares of the REIT, and then the money that you put in, you're basically putting in as a lender, and it's like a loan. So you lend the money to the company, and then they're going to pay you a percentage, an interest percentage, and that's how that works. Let's talk about some of the pros and cons about investing in REITs. Okay, let's talk about the pros first. One of the biggest pros, I think, is you get to invest in real estate without all the hassle. Buying real estate is pretty tough in the first place. You need a down payment of usually 20%, and you need to have a good credit score. You need to get approved for loans, and instead of going through all that process, you can just invest in a REIT and receive a stable income every month or quarter or whenever they pay out their dividends. Another pro that I think about investing in REITs is the liquidity. Selling real estate property is very difficult. It typically takes a few months, if not more. And when you have a REIT, you can just buy and sell from your brokerage very easily. Another thing about investing in a REIT is the management. Like I said, you don't have to go through all of that hassle where you have a real estate property and you have to manage it, maybe putting in tenants, making repairs. The REIT, the company that takes care of that, all of that for you. Another pro that I think about investing in REITs is diversifying. If you have all your money tied up in stocks, or maybe you got some money put in bonds, you can really diversify and get your money invested into real estate, which I think is one of the best investments out there. Okay, another really good benefit about investing in REITs is a stable cash flow. So by law, a REIT has to pay out 90% of the income that they make, the net income. So let's just say the company made $100,000 net income, 90% of that, which would be $90,000, they would have to pay that out to the shareholders of the REITs. So that is consistent cash flow coming in every month or quarter whenever they pay it out. Alright, now let's talk about the downsides and the cons of investing in REITs. Well, one thing that I feel like is a big negative is when the property that the company owns, the equity that they build up over the years of the payments that are made, you don't get, typically you won't get any part of that. You just get the income from the dividends. So that is one of the reasons why your total ROI is lower and when you actually would invest in a real estate property yourself. Another big negative bad side to REITs is you don't have really good capital gains. If you were to Google any REIT on a Google, then you would see that over the last 2, 3, 4 years, the appreciation is very low. Just like dividend stocks, they don't really appreciate very much over time. So just like with dividend stocks, the dividends that you make, that you earn, is taxed like regular income. So that, just like in REITs, they also, the income that you receive, the payments that they give you, is also taxed like regular income. So I think that's a negative downside to that too. Okay, so I know I talked about it a little bit before, but I want to go a little bit more into detail about the sectors of the REITs. So there's a lot of different types of real estate out there, like I said, and one of the first types of sectors that they can invest in is residential property. So residential property is basically investing in multifamily apartment buildings. Those large, anything over 4 units is typically considered commercial. Those large apartment buildings, that's one of the sectors where REITs can invest. And I think that this is a very good area to invest in because at all times people are going to be needing to live in houses, of course, and rents are going to be constantly paid month after month. So I think this is one of a consistent and stable area where REITs can invest in. So I think you should look at which area the REITs are investing their money in, and then you should pick according to that. The next is retail. Of course, a mall or any retail store is going to be need to put in a building, which is real estate. So these companies, like let's just say Macy's, doesn't just buy the real estate building. They typically have leases, and they lease it out from a real estate company. So REITs invest in retail as well, and I think you should really consider retail nowadays. If you've noticed, over the last few years, retail business has really dramatically gone down. That's mainly because of online shopping. Much less people go into stores to buy their clothes or whatever they need. And also in retail, shopping malls are also part of this. So, like I said, over the past few years, shopping malls have actually the demand, well, the traffic for going into malls has actually reduced a lot because, like I said, people just don't go into stores anymore to shop. You can just order online and you just get everything to your home. So why waste time? All right, next up is office buildings. Of course, a company is going to need some office space for the employees to work, and they don't actually buy their own real estate most of the time. They just lease it out from companies who are real estate companies. So this is another sector where you can look into. Lastly, and I think this is actually one of the best ones to invest in, is healthcare. Healthcare includes nursing facilities, retirement homes, and hospitals. I think healthcare is probably one of the best areas to invest in for REITs, and that's mainly because as the baby boomer population increases, the demand for nursing facilities and retirement homes is just going way up. And of course, as the population increases, hospitals are always going to be more in demand. So I think that healthcare is probably one of the best areas where you can invest your REITs in. And actually, that's where I'm investing my money in. Okay, so now let's talk about the current state of REITs. Because of the coronavirus pandemic, almost all the stocks are basically down about 30% in value. And I think this is a pretty good opportunity to consider doing some research on where you should invest your money on. And the REITs, like I said before, their capital gains is not very high. They're very stable. They remain at the same price for a few years, maybe go up 1-2%, not that serious movement. But right now, they're all down about 30%. So maybe you can consider that if they were to, improve on their pricing a little bit, then you can make some capital gains. And on top of that, the income that is guaranteed, which is 90% of the income that they have to pay out, you can make that money on top of the money where the capital gains you will make from the price that is low right now. One advice that I always recommend is for new investors and beginners, I really think that they should look into ETFs because they're basically a basket of stocks, usually in a typical one industry. So if you buy a REIT ETF, you can get all the REITs in one ETF, and that is pretty stable, and you can make some money off of that too. So I think Vanguard has one of the best ETFs. You should really consider looking into that one. you should always do your own research and you always do your own due diligence on what you're investing in. And this is the end of the video. Thank you for watching, and please subscribe to my channel if you can.